What's going on, traders? Welcome back to another video. So I thought I would make this video to help explain some reasons as to why Alibaba's seen such a huge sell-off today. If you're not aware, if you look at Alibaba right now, the ticker BABA, you will notice that it sold off from 100, basically 185 all the way down to 174. So within the matter of 30 or so minutes, we've seen Alibaba drop $10 a share today on its earnings day. So this is an extremely massive move. A lot of people made a lot of money on this. Unfortunately, I can't say the same for myself. I missed the move as I was not paying attention to Alibaba, missed the short entry, didn't want to chase it down. So for myself, I missed it, but I'm going to help explain some of the reasons as to why Alibaba's seen such a massive move today. So I hope you guys like the video. I'm going to go ahead and start sharing the screen, and we can really dig into the technical analysis side of why Alibaba seen such a sharp move to the downside. All right, so give me just a second here. So here we are. We're going to start with Alibaba, and then we'll look at a few other things. Let me remove some of these drawings. So the most important part I want to talk about here is, for one, the pattern that occurred right in the beginning of the day. So this is kind of be our area of main focus here for this lesson, as partially the pattern that happened right here. We'll touch on the earnings, and then we're going to touch exactly what happened right here at, I believe that was a time of, was 11:43? Let me see. It was 10:43. All right, so 10:43 is a very climactic moment for Alibaba before it just completely chopped its head off and died. All right, so with that being said, for one, if you look at the news on Alibaba today, they crushed revenue but missed earnings. Okay, so they crushed revenue, missed earnings. So however you want to look at that, that was kind of the main headlining and title for their earnings report today. Secondly, which I find to be one of the most important factors that dictated this massive move down, was a very, very good ABCD pattern. So I'm going to identify this for you. So what we're going to be focusing on right here is this section of the chart. All right. If you're not familiar, maybe you're newer to trading, you probably wouldn't have spotted this, and that's okay. I'll identify it for you today. So what we're looking at here is a bearish ABCD pattern. All right. So I'm going to label this off for you. So the ABCD pattern starts like this. We have our bottom here. So this would be low of day, which is A. We have our then kind of dip area, because if we're referring to bearish, this would be B. And then we have our lower high C. And then we have the breakdown and then the move lower, which this is all referred to as D. So from here, there, and all the way down, this is all referred to as D. So I'm going to label this a little bit differently. So an ABCD pattern is what we call a great setup for either longs or bearish trades. So this is kind of what an ABCD pattern really looks like. I'm going to draw this out. All right. And then secondly, let me take this guy and this guy, and we're going to draw some trend lines. Boom, boom, and boom, boom. Okay. So again, this is in terms of a bullish ABCD pattern. Okay. We have our letter A, which represents high of day, or the first high that the stock puts in on the day. B is represented by the first low or major pullback that the stock sees on the day. C is labeled as the higher low from B. So B is our first low of day. C is marked off as the higher low from B. So we start an uptrend. And then D is referred to as the breakout or the run in which the stock then goes on. So this right here that you're looking at is a picture perfect setup of a bullish ABCD pattern. Okay. But what happened with Alibaba was a bearish ABCD pattern, right? So if I were to take these drawings off the screen and show you a bearish ABCD pattern, it would look like this, where you have your first low of day followed by high of day, or your kind of pop up, your squeeze, shall we say. Then we drop down, we put in a higher low right here, and like this, and then it goes down. So in reverse terms, bearish, this is what we would call the bearish ABCD pattern. Okay? And then we would label this guy oops, excuse me, let me get that up there. We would label this A being the first kind of low a day, B being the pop-up, C being the lower high, and then D being the breakout that may in turn go as far as Alibaba did. Now, if we go over to the chart, we'll zoom in and we'll take a closer look at this. All right, so we have our, let me mark these all off again. We have our A, then we have our B, C, and then this area right here is D. And then D is also this whole move. All right, now let's put the trend lines on there. Okay, so there's the ABCD. A being low of day, B being the pop-up, which failed to push the stock higher. Then we pull back, right? So let me draw this all out for you, right? So we have A, which is our starting point, pushes up to form B. B is the move to try and attempt to go higher. If you draw this line straight across, you'll see that it rejected right off the pre-market high resistance. So then turn, we start downtrending again. We bounce, we attempt to go higher once again. We fail to go higher. So now we have a C, which is a confirmation of a lower high, meaning we are starting to trend down. Once C is formed, the push goes lower, and once we break this trend to the downside, we now have D. And D is usually the breakdown to the downside, or if you're talking in terms of a bullish move, it would be the breakout to the upside. So let me get all these old drawings off here. 1 second, let me reverse these all off. So that there is the ABCD pattern, and I'm going to map it off one more time because I just took it all off by accident. So here we go, our ABCD pattern to the downside. All right, now let's label them all once again. We'll do white. So you have your A, we have B, C, and D. All right, so you have ABCD pattern to the downside. So not only did we have a very bearish, perfect ABCD pattern on BABA, which is a bearish move, we also had it, for one, reject the pre-market high. Again, they had good revenue but missed earnings. So again, their earnings report wasn't just phenomenal. So not only did it miss earnings, there was a perfect bearish ABCD pattern, all right? Rejects the pre-market high. There's a few other little indicators that we'll map off in here. Another one is once it kind of rolled over and it broke its 200 moving average, it went down, popped up, and it rejected the 200 moving average once again. Not to mention, this is where it's going to start getting a little bit interesting. I'm going to bring over a chart of the S&P 500. All right, so let's bring this over. And I'm going to delete all these old drawings so you can kind of see. So if we zoom in here, you can see that the SPY, the ETF or the S&P 500, took a very big slump here at what time? I bet this is going to start being interesting. So if we look here, the S&P 500 started to drop right around 1044 and 1043 on these candles right here. This was the start of the big move down, okay? Now if we go and look at what company do you think we're going to take a look at again? Oh, we're going to go back and we're going to take a look at Alibaba. And we go look at when it started to break down, which was right here. The time frame is the exact same, 1044 and 1043. So you take a very bearish pattern along with okay earnings, along with a massive stock market pullback, sets itself up for a perfect storm. So taking everything into consideration, right? And not only that, let me take a step back. There's a lot of people, even myself included, that thought that Alibaba might have a really good day. So you have to think, anybody, right? Anybody who is long bias on the stock today that started dip buying here and dip buying here probably had stop losses in right around that spot that it started tanking. Okay, so let me put it this way. If I were to have got in long on Alibaba, let's say here at the first low a day, my stop loss would probably be somewhere around this red line, right? I probably have a stop loss somewhere in at that red line. And as you can see, right in this area, that's where it started to panic off really big. So anybody who bought at the lows today on Alibaba anticipating a move to the upside throughout the day probably had stop losses in somewhere around the price point of 183. 183 was really where this thing started to drop off the face of the earth. So again, let's repeat this. Not so good earnings. Tons of traders thinking that it might go long, buying the dips, having stop losses in right about 183, maybe 183.50, somewhere in that area. Mix that with a bearish ABCD pattern that also correlates with a massive stock market pullback right at 1044 and 1043. This sets itself up for the perfect storm to have a massive, massive pullback, okay? Putting all that together, there may be some other reasons. Who knows? There's big institutions that dumped out 100,000 shares. Who knows? Every single little detail. But what I can tell you is this was a perfect bearish ABCD pattern mixed with not so great earnings, mixed with a lot of dip buyers, stop loss getting hit, mixed with a perfect correlation of an ABCD bearish pattern, while at the same time the stock market ended up rolling over and slamming. Put that all into consideration, and it makes quite a lot of sense that you would see a massive move like this to the downside on Alibaba. So I hope you guys liked the video. I hope that was a learning experience for you. If you have any questions, concerns, always put them in the comment section below. If you would like to join into our private trading group to learn more about trading, you can trade alongside with me and our moderators and get group classes, and we can help mentor you. The first link in the description will be the one to follow, and you can get into our private group. So thank you guys once again for tuning into the video. I hope that was enjoyable for you guys as it was me, and I'll see you guys on the next video.